As JSE down by just over 1% at this stage, so we've seen some fairly choppy trade today because it has been retracing most of its losses, extending those though as we head into the afternoon.
Yeah, Stephen, certainly. I think also mainly it's because of the thin liquidity that currently exists in the market. Yesterday was Thanksgiving, so the big players in the United States were not around, and it's just a very, very thin and choppy sessions this morning. Also on the news of Portugal being requested to tap into the EU funds for or bailout packages. Just on top of that would be, Ireland's problems also there. They've got their by-election next week, so the market digesting quite a lot. And I think also the North Korea, South Korea issue being really prominent in everybody's mind and bringing a lot of risk aversion back into the market. So we've seen major pullbacks. I think even the rand went to about 7.16 a little bit earlier on, on the back of this risk aversion in the market.
And of course, we have seen foreigners pulling out of South African equities, and that adding to the pressure on the rand, haven't we?
Yes, absolutely. I think yesterday there were net sellers in our bonds and our equity, and our forex, and I think that's also based on maybe towards the end of the week, America wasn't around. They're only trading half day today, so some players taking the risk aversion into consideration and taking money off the table. So perhaps next week we'll see some more interest again, especially after players have been able to digest what's going on in the Eurozone and be able to cover themselves accordingly.
Of course, we have had an underpin for the gold price coming particularly from the tensions in the Korean peninsula between North and South Korea. The gold trading around $1,366 an ounce. Wouldn't you have expected a sharper spike up just given the risks that have emerged this week?
Yeah, I think there we can also blame the thin liquidity again. A lot of players not in the market. Gold is still bid at these levels, but yes, we are right. We would have expected a more sharper reaction in the gold price, but we've seen more of that reaction in dollars as people sell foreign assets and then go climb back into dollars, and perhaps more of an increase in US Treasuries when that market is open.
Of course, you have pointed out the US holidays yesterday, half-day trading today, so players back at their desks on Monday. This really does kick off the start of the festive season, though, doesn't it? So would you expect positions to start being wound down ahead of the year end?
Yes, absolutely. We will see some portfolio dressing, window dressing, but I think we'll see also a lot of unwinding, a lot of profit taking. The past few months have been good for the market, and we've seen a nice recovery there. But I think all players know that it was not based on fundamentals, so they want to actually start taking a lot of profit. So perhaps we'll see some subdued trading towards the rest of the year. Perhaps stay at these flat levels where we are for the top 40, not go beyond 28,000 points there. So I think we will see some pullbacks later on as we go towards the end of the year.
Of course, one share that has been moving rapidly, that's Capital Shopping Centres. We had the share down 3% on Wednesday. There was concern about some of the fundraising to buy a shopping centre called the Old Trafford that's in Manchester. That share up 8% yesterday, though, and it seems to be on speculation that there could be a takeover for this group.
Yes, Simon Property Group has sent a letter saying that they have an interest in Capital Shopping Centres. However, the important thing there to remember is that they haven't set an amount, they haven't set a price. All the speculation is right now is that it would be at a significant premium percentage-wise above the NAV, the current NAV of Capital Shopping Centre. And then they asked Capital Shopping Centre to also hold off on the talks or the acquisition of Trafford Centre. However, that was declined. And I think, it will be a very interesting play. Whether will it be hostile, then we expect perhaps a premium of 20% above NAV that Simon Property Group will do. And will Westfield, if I'm not mistaken, group in Australia, who also has an interest, a 3% interest in Capital Shopping Centre, also come to the party and make further bids there. So it will be a very interesting play. They've got the emergency general meeting on the 20th of December, if I'm not mistaken, 20th of December coming up, where they will go and vote as to whether they're going to carry on with the Trafford deal, and it's very lucrative for them. So it will be a very interesting play to see what happens.
Of course, Capital Shopping Centres is one share that has lagged the market recently. It was spun out of Liberty International. What sort of interest is there in this group from South African investors? Is this something that people have in their portfolios?
I think there is an interest in South African portfolio, South African investors, but it's mainly foreign. I mean, yesterday when the news came out, we saw the UK property sector go up quite a bit. So I think there's a lot of foreign interest in there, just like our other retail stocks where we see a lot of foreign interest there. But yeah, I think it's mainly foreign based, and then we'll see them actually punting a lot more for that stock for the local listing of that stock, and and I think going forward it will be a good move for that sector, especially in the UK.